A robust trading strategy is your key to market success. Do you have one? Well, if not, the 8-13-21 EMA strategy is definitely worth a look. It's a great way to trade on short time frames, and it's ideal for traders who want to prioritize speed while preserving their position management flexibility. Now, are you a day trader? How about an intraday trader or a scalper? The 8-13-21 strategy has you covered. It can be used to trade breakouts, pullbacks, and trends. Now, in this video, we will show you how to buy and sell with the 8-13-21. All right, let's trade it.
The 8-13-21 strategy uses 3 exponential moving averages to identify the market state. Each EMA is special because it is a Fibonacci number. This is key as it preserves the proportionality of price action. The 8-13-21 may be adapted to any time frame in any market, and it's simple to trade. When the 8 EMA crosses over the 13 and 21 EMAs, you buy. You sell when the 8 EMA crosses under the 13 and 21 EMAs. Let's get you set up to trade the 8-13-21 on the TradingView and MT5 platforms. First, TradingView. Go up to Indicators, click Indicators, cursor down to Moving Average Exponential. You're going to want to click that 3 times, and what that'll do is set up each EMA. You're going to have to go up and adjust the periodicity of each EMA, so go to Inputs. For instance, we put 8 here, and then also go to Style. You're going to want to choose a color and maybe metal with the line thickness. That's your personal preference, and you go through that process each time. Set 13 and 21, and when you're done, it should look exactly like that. Now on MT5, it's a bit more involved. You're going to go up here to Insert, you're going to go to Indicators, go to Trend, and then down to Moving Average. Give that a click. You're going to set your period for each one of your moving averages here, 8, 13, and 21. Make sure it's on exponential, change the color and the line thickness, and when you're done, you should have a series of 3 EMAs. So there it is for MT5 and TradingView. Let's execute an 8-13-21 EMA strategy buy. In this case, we're waiting for the 8 EMA to cross above the 13 and the 21 EMAs. We've got an orange line that represents our 8 EMA in this case. At that juncture, we're going to buy the market, and then we're going to align our stop loss and profit target on the fly. So here we go with our TradingView market replay function. We're waiting for that crossover to develop. The orange line needs to cross over the blue and the purple, and you can see right there it is. So there's our crossover. Now, there's a couple ways to enter right now. You could buy the market right when that crossover occurs. You can wait for a positive candle, or you can wait for a pullback right to your 8 EMA. That's completely your choice. I would recommend not fine with it. Just get in the market when we get the crossover. So at this point, let's go ahead and buy the market, and you can see we are now officially long the Euro USD on a 5-minute chart. Now we've got to arrange our stop loss and our profit target. Well, our stop loss, probably a good area for that, is going to be right beneath our bearish market structure there. So what I would say is put your stop loss right beneath that swing low, and from here you can design the trade any way you like. You could shoot for a 1-to-1 ratio, where we could put the ratio right up here. You could shoot for the top of market structure, or try for a 1-to-4 or 1-to-5. I really recommend dialing in probably a 1-to-2, 1-to-3 on these types of EMA trades, and of course a base 1-to-1. Nothing wrong with that. In this case, let's go ahead and shoot for the top of market structure, and you can see on a $50,000 account with a 3% risk, we're looking to make a little bit of money on this trade. So let's go ahead and roll forward in time and see exactly how it pans out. As you can see, the EMAs are tracking the bullish price action beautifully, and we go right up there and pretty much take our profit target out relatively quickly. So short-term trade on the 8-13-21 EMA, that is how you execute a buy. Let's execute an 8-13-21 sell. In this case, we're waiting for our EMA to cross below the 13 and 21 EMAs. Then we're going to sell. We'll align our stop loss above the swing high, and our profit target will be below price action to capitalize on falling prices. So let's go ahead, go to our TradingView market replay functionality. We'll go ahead and hit play, and what do we have here? We're waiting for our crossover. You can see it's almost developed there. Let's roll forward in time a little bit further, and there's our crossover. Now remember, if you want to get in right away, you could enter right on the bearish close of that candle. You could wait for a pullback to the EMAs itself. Really, the choice is yours. Just be consistent. That's the number one thing. Be consistent. So let's go ahead and sell the market right here. Now we have an opportunity potentially to cash in on some falling prices. Let's build our trade. If we're going to build our trade, the first thing we always do is align our stop loss. In this case, we're going to put our stop loss right above this bullish swing high, really the previous swing high. You can put it down in here if you'd like, but I would really try to go after that obvious market structure. And as far as your profit target goes, you can go right down here to the bottom of this market structure, or you can align it maybe at a 1 to 2, 1 to 3, whatever you'd like. Let's go ahead and shoot for a 1.5 to 1 here, risk versus reward ratio, and see how we do. So let's go ahead, push play, and see how this trade pans out. You can see you get immediately just a huge break. So that's a good example of a trade that just runs right down, gets your target. Now, a lot of traders are going to be tempted to stay in the market, and you certainly can do that with this strategy. Just remember, if you're going to use it as a trend following strategy and try to get those big moves, you're going to exit when that EMA crosses back up over the 8, the 8 EMA crosses over the 13 and the 21. And you can see in this case, you've got in on a fairly good trend, but once it does cross over, you're going to have to exit right there. That's a great way to catch a big move, but in flat markets, that trend following strategy can be very difficult to execute, especially when you get into choppy whipsaw trade. So that's how you execute a sell on the 8-13-21 strategy.
The 8-13-21 is well suited for intraday trading. It allows the trader to cash in on fixed risk versus reward ratios and trend following opportunities. Now simply add the 3 EMAs to your chart. You buy when the 8 EMA crosses over the 13 and 21, and you sell when the 8 EMA crosses under the 13 and 21. That's all there is to it. Now, if you like this video, be sure to subscribe to our channel. If you have any questions at all, leave them below and a member of our team will be sure to answer. All right, that's all for now. We'll catch you on the next one.